Yeah, we're back here again, and I promised that I'll share the answers to the questions that I had given earlier on. Now, take note. The tax bands are there, and the ones to be used for the March 2022 exam. If you're obviously looking at it out this video after March 2022, obviously the tax tables are different, so you can check the Zambia Revenue Authority webpage, and they'll obviously have new rates. So, well, you can also check our site at Phuka Academy. We'll have obviously a link if you cannot get yourself to ZRA, all right, which is Zambia Revenue Authority. But yeah, so let's get into the questions now. Take note, I am not playing any trickery. I am only getting asked to answer these particular questions. If you want, you can pause this video, try to answer the question, look at the tax tables, and so on and so forth. We'll try to go back to my previous video, my two videos, that's income tax and Zambian tax, and then see if you can get something out of it. Also, you can try to check with my posts on LinkedIn. There's some hints there as well on what we're going to do here. All right. So I have to delete this, pause if you want, capture them, capture whatever tax bands are here, and you can use them later. All right, so we'll do the first one. So Esther has sales of 700,000 for the charge year 2021. She made profits worth 87,400. Now, take note, a person who makes sales or turnover which are below 800,000, that person is liable to paying. So anyone who makes anything less than 800,000 has to pay turnover tax. Okay, sales, turnover, or whatever you can call it, or revenue. If you make anything 800 and less, you have to only pay 4%. Okay, so right now, this is 800 times 4%. Okay, 800 times 4%, that is AO2, which is 800 times 4%, which gives us 32,000. This is basically the tax payable for this particular year. Okay. Yeah. I know you were thinking so hard. Well, similar, whatever tax it was. So it is not trickery, please. It is just something I needed to see if people can pay attention to detail. Okay. Now let's assume Esther made sales which are above 800, but her profit remained 87,400. Okay, so this is scenario one. So let's assume she made sales. So in both cases, just to take you back, in both cases, if a business is a farming business or a grocery store, as long as she only sold 700, it's 4%. Okay, it should be for over 100. Okay, to others, it's 4 over 100 or 4%, as others would want to see it. Yeah, it's 4%. Okay. Scenario two, she sells above 800. If she made sales above 800, it changes the whole concept. Okay. We are not going to use sales this time when taxing her because it might be a bit too much. Okay. So we'll say her sales profit. Okay. Or we start with, if it was a farming business, of her farming profit. What is a farming profit? A farming profit is 87,000. Okay. We'll push it here, 87,000. 400. We are not considering using sales at this particular point, because charging tax on sales would be very, very expensive for the seller or the trader at this particular point. So we resort to the profits that they've made. Okay. Then on our tax tables, we are told the first 48,000 in a year, the first 48,000 now, 48,000 in 12 months is 4,000. So technically the first 4,000 per month that you earn is not taxed. Okay, the only thing they remove is NAPSA. They remove NIMA for others. They remove, if you have some employee pension benefit, something, they remove those things, but they don't tax you. Okay, NAPSA is not a tax. It's your money at the end of the day. Okay, so the sales, or rather farming profits, is 87,400. Okay, then we have to deduct, which is less. We are going to deduct the first 48,000, which is tax-free. The first 48,000 minus 48,000. Okay, what's the balance? The balance is 39,400. Now, we would do this for either scenario, whether it's a farming business or it's a grocery business. This we will always deduct. The difference comes in here, all right? For a farming business, okay, so for a farming business, sorry, I am failing to get around this aspect, all right? So if for a farming business, what we'll do is we'll pick it up from here. We will only charge 10% on this remaining balance, okay? Which is taxable, this taxable balance. All right. All right. So because I've hidden my screen, sorry. Let me try to push it down a bit. I think this is fair. All right. So this taxable amount, which is 39,400, is going to be taxable at 10%. So we'll say 10% here and 39,400 here. All right. Yeah, basically the result then will be equal to this times 10% will be 3,940. There we go. That's our answer. That's how much tax the person will pay. In the second scenario, if this was basically a sale, a grocery, the person on this 39,400 will pay the first band, they will pay 25% on the first 9,600. Okay, remember they have 39,400 to go. So on the first 9,600, they will spend, they will be charged 25%. That's 2,400. Okay, that's 2,400. The balance that will remain, how much is the balance? The balance that will remain after this is, that's 39 minus 24, 37,000. Of this The next 25,200, all these bands are on that schedule I showed you. The next one, which is the next 25,200 will be charged at 30%. So we say 25 times 30. So they will charge, the tax that will be paid is, so that's a tax amount there. Please take note, anything here is considered the tax amount. I should highlight it even. Okay, maybe a lighter color. Yeah, that was too hard. So what balance will remain from the 37? Will remain with a balance of 11,800. Of the 11,800, okay, of the 11,800, I'm assuming that is correct. That is 39 minus, sorry. It was 39 minus 96, 29,800. Sorry, I pressed on the 24. Yes, so 29, and that is the remaining balance. So the remaining balance is 4,600, which will be taxed at 37.5%. So we put it here, that times 37 and that. So using this one, the total amount of tax to be paid is 11,685. While if this was a farming business, the tax to be paid would have just been 3,940. So take note, this amount, if it's a taxable business, from this profit, if it's a taxable business, you only tax this residue of the tax-free amount at 10%. If it's an other business, you tax the first 9,600, you tax at 25, the next 25,200, you tax at 30, and then the residue, you tax at 37.5. Okay, you can take note of that. If the person is an employee, we'll take the same approach. All right. Let's clear off everything here. We'll take the same approach. If the person is an employee, let's remember, so if this person is an employee, which is calculate the income tax payable by Elias. Elias is fully employed. Take note, Elias is fully employed. And because he's fully employed, the total emoluments that he has, housing allowance, plus vehicle allowance, plus basic pay, plus any other thing that he's granted, converted into monetary value, has to be taxed. Okay, so this gentleman or lady, Elias, so Elias earns 300,000 in this particular charge year. This 300,000 that Elias earns will need to be taxed. Now we're taking it, this is his net, because there's nothing else that he has earned. Remember, we're not removing anything. We're not removing NAPSA. We're not removing anything. We're just getting his total emoluments or total or gross pay, as we'll call it, okay, before any taxation. This is the tax now that we're going to charge to make sure we come up with a net pay. Now, we will do the same. Firstly, we will less the tax-free amount, which is minus 48,000, meaning every year you are given 48,000 as tax-free. The amount that remains as a taxable amount, okay? The taxable amount is 252,000, okay? This person's taxable amount is 252,000. All right. What are we going to do? We'll be taxing it as per bands. The first 25%, The first 25%, which is the first 9,600, will be taxed at 25%. There we go. That is 9,600 at 25%. It gives us 24. What's the balance? I'll be writing the balance in this column. The balance for taxing. The balance will be the total amount that remained minus how much has been taxed at 25%, which gives us 2,242,400. Remember, do not deduct the 2,400 like I did earlier. This is a tax amount and not the income amount that has been removed from there. All right. Next, the next batch, which is a 25,200, will be taxed at 30%. Okay. Times 30%. That is 7,600. What's the balance here? This is this amount minus the 25,200. The balance then remains 217,200. 217,200, we get the whole lot of it because we are getting into the last band, which is 37.5%. This one, we are going to tax like this, 217 times 37.5%. That gives us that the balance remains 0 because it's 217,200 minus 217,200. Total tax to be paid, 91,410. Okay. Now, what if this person only earned 30,000 kwacha? Okay. What if this person earned only 40,000 kwacha? Okay. What if they earned only 40,000 kwacha? How much would be their tax? Or how are we going to calculate it? If this person only earned 30,000, there will be nothing to tax. All right? Because everything would be consumed by the tax-free. That's for people who earn 4,000 minus and something like that. Okay, a person who earns 4,000 a year, a month, and so on and so forth, those people are not taxed. If this person earned 50,000 kwacha, okay, their tax-free will be 48 and the taxable amount will be 2,000. We will get the 2,000, put it in the bands. The first 9,600 will be taxed at 25%, but we don't have a 9,600. We only have a 2,000. So we'll just write the 2,000 right here and then tax it. That will be that times there, and it gives us 500. This person will pay 500 kwacha that particular year only. Okay, 500. And because there's no balance, there's nothing. That's all. For a person who earns 60,000 kwacha, let me put it at 70,000 kwacha. This person who earns 70,000 kwacha will have taxable amount of 22 after we remove the tax-free amount, meaning the first 9,600 when we start taxing will be taxed at 25%. They'll be taxed. So the 2,000 will have will be their tax. All right. So 22,000 minus 96, which has been taxed already, they'll remain with 12,400. Now remember, the next band is for 25,200, but we don't have that 25. We only have 12,000. So we'll limit or restrict our calculation to 12,400 and then tax it at 30%. There we go. 30 times 12,400, meaning 3,720. We even find our total tax there, which is 6,120. Okay, that's how you get your pay as you earn. Whatever amount you get at the end, which is 70 minus 6120, this is what we call your net pay. So please do not confuse net pay and gross pay. All right. This is your net pay. Net means after tax, after NAPSA, after whatever it is. All right. What that is statutory, that is your net pay. Your net pay can be net pay after your advances as well. But for the sake of people who just want to know how much you get, they simply mean net pay, that is gross pay, the total amount you earn minus taxes, NAPSA, and other statutory, I mean legal things. So take note. All right, please, this is the tithe amount where you get your tithe. I know this is very controversial, not here. All right, you can get it from here. Your total earnings are right there. All right, NAPSA comes from here. Everything comes from this 70,000. God cannot get it from here alone, or from there alone. All right, so it's out of the 70. Thank you. That's a very controversial statement. Hope you still like me, and yes, you should still like me. Thank you very much. Have a blessed evening. Take care of yourselves. If you're doing this during the day, that's even better. All right.